Good morning, everyone, and welcome to this Treasury Lab hosted by Refinitiv, which is now fully part of the London Stock Exchange Group. My name is Audrey Johnson, and today we will be talking about embracing important changes in Treasury. And specifically, we'll talk about how corporate treasurers can efficiently integrate new changes of sustainability and innovation as part of their day-to-day responsibilities. So I'm delighted to be joined by a panel of experts. Jean-Marc Mercier, Vice Chairman of Capital Markets at HSBC. Ian Kirkpatrick, or Director of Funding and Risk at the London Stock Exchange Group. And Dr. Barnabas Axe, Global Director of Sustainable Finance at Refinitiv. So Jean-Marc, Ian, and Barney, good morning, and thank you very much for joining me today. So Jean-Marc, let's start with you, and let's start maybe with really the basics. So firstly, congratulations to HSBC for being the leading arranger of sustainable bonds. From your experience working with corporate treasurers, in their journey to sustainability, what are the different steps that corporate treasurers have to do in order to be able to develop and implement an ESG strategy? We talk a lot about, having to set up an ESG framework. What does that actually mean, and how does that work for corporate treasurers?
Thank you. It's clear, right? It's increasingly important that corporates have a very clear corporate sustainability strategy in place, and then ensure that the financing instruments fit with this sustainability strategy. So corporate treasurers can finance green projects, social projects, or a combination of the two. I think it's well-trodden path at sustainable financing. We've seen green loans and RCF now becoming commonplace. It's very often a first step into the ESG space. They give corporates a chance to calibrate their KPIs. Sometimes it's the first time as a corporate, and also to engage all the stakeholders internally, right, in IR and elsewhere, in all the projects, to get everybody aligned. It's actually quite useful, and everybody's usually extremely motivated. Tesco was an example of a corporate who did a green RCF before taking the structure into the bond space with a very, very successful SLB. We'll come back on SLB later, the sustainability-linked bonds. But there are many more examples too. For corporates where CP, commercial paper, is a relevant product, green is relevant, right? I mean, Endesa is one example of a corporate that has integrated a KPI in their commercial paper program. And all the big money market funds have ESG funds, right? And this is something we expect to see more and more. Obviously, bonds, right? That's, I think, the mainstream, whether use of proceeds, the classic, or sustainability-linked bonds, to focus on environmental or social targets, or both, right? The sustainable bonds. ESG is really stretching now beyond that to sustainable. To the green supply chain finance, to derivatives, to funding, or even deposits, right? So it's all, we're starting to see that as well in export finance. Back to bonds, which I think is a mainstream, we've seen many treasurers come to the market this year, 30%, and that's in number of transactions, so 30% of sterling corporate bond transactions were green, social, or sustainable. It was only 8% last year. And in euro, sustainable issuance by corporates close to 20%, almost 3 times last year. But again, it's a number of transactions. It's actually more in amount. If we come back to SLBs for a second, that really has opened up the sustainable bond markets to a bit more difficult issuers, carbon-intensive issuers, who otherwise are not best placed to issue a use of proceeds green bond. We've done a transaction for Lafarge Holcim, a debut issuer from the building materials sector. They entered this market by doing an 850 million 10-year SLB late last year. And we have seen others in the sector follow suit.
Thank you very much, Jean-Marc. And so obviously in the process of setting up an ESG framework as a view to be able to issue an ESG instrument, there's obviously corporate treasurers have to deal with a lot of data to be able to formulate their goals and their KPIs, as you mentioned just now. But also once the framework is set up, they have to keep track of key metrics for reporting and disclosure purposes. So Barney, can I turn to you and ask, what are the opportunities, but also the challenges that corporate treasurers face when it comes to managing all this data?
Thank you for the question. I think they are both challenges and opportunities, and both of them are coming from the fact that you have to sort of align your ready KPIs with the reporting you are making to different stakeholders. And it's very important that you know who your stakeholders are. And there can be actually a multitude of them. So one of your stakeholders are the investors. They would need either operational data in detail, or they would also need revenue breakdowns of your operations. When it goes to banks, of course, you have to translate those policies into detailed sort of action plans where you talk about reporting, where you talk about management, and where you talk about the different milestones that you are managing when you sort of carry out the transition, so that you can always update the markets and sort of make sure that you are avoiding the concept of greenwashing. The other stakeholders are the regulators that are increasingly coming into play, and of course there are a lot of regulations that are affecting companies and corporates, either directly like the CSRD or indirectly like SFDR and EU taxonomy. These latter regulations are directly affecting asset managers, but they are of course going to go to corporates for missing data sets. And the fourth one is of course the internal stakeholders that Jean-Marc has mentioned, IR departments, reg departments, etc., operational departments. If you want to sort of monitor your value chain and actually benchmark against other competitors of yours, then you need to reach out to these stakeholders, that it has different aspects and impacts to your revenues or to your bottom line. And the fifth one, of course, increasingly so, is the rating agencies and the frameworks. There is SESB out there, there's TCFD, GRI, and there are so many ratings agencies that, whose ratings are carried by the markets and looked at by the markets. And I think it's very important that you are aware how these ratings are working, and this is increasingly the task of the IR departments and the treasury departments. You have to know how the data is collected. Is it survey-based so that you can prepare for that, or is it just data collection simply, or is it just social media followed? Is it a relative or an absolute rating? Do they have different weights to different materiality angles? Is there any analyst overlay as such? What is the transparency level when what they provide, i.e. the rating agencies, for you to be able to decide where you put your chips down? So all these are very important aspects when it comes to rating agencies, and the more you know about these, and you might make the initial investments in time, that will make your life easier downstream when you start when you start reporting and collect the data, which obviously has its own challenges. So there is the different locational angles. There are the different regulations that are applicable to different locations and regions. There are different stakeholderships when it comes to the production of data and the collection of data. Let's say the production floor is producing something in different units and in different perspectives, what the IR department wants to have. Different industry specifics. Even if you're a conglomerate, you have to take that into consideration. It's increasing the case that you also have to report on business level other than corporate and overall level, which is a regulatory requirement. So with all these in mind, and to shorten my answers of the opportunities and challenges, you have to take into consideration these things that I just highlighted, and from the operational angles, you will have to make certain that you are providing data that are agnostic to different data frameworks, that you provide numeric metrics so that the momentum can be followed and that the pathway can be drawn, that you provide details not only on the policies, but what targets are those policies coming with, and how do you manage if you have to course correct. and you provide details on business segments. On the revenue angles, you have to make certain that the revenue information is broken down into as little segments as possible, because there are a lot of inclusion-exclusion policies. It might actually save your place in a portfolio if there are, let's say, a conviction that you 20, 30, 50% of your revenues are actually coming from renewable sources, even though you are an oil major. And of course, you have to also be putting your chips in the right place. If you have limited resources, just make sure that that you are reporting on things that are conceived material. Thank you.
Thanks very much, Barney. So, if we, closer to home, the London Stock Exchange Group, sustainability really is a core principle of our business. And so LSEG was the first exchange to have committed to net zero earlier this year. So Ian, can I ask you, when we talk about net zero commitment, what does it actually mean? And how does that form part of the broader sustainability strategy of LSEG as a business?
Yeah, thanks. Thanks, Order. I think I'll probably expand a little bit. So this commitment for our group covers both our own carbon emissions, but also our influence across the marketplace and through our business and how we support our clients. Referring back to Barney's answers earlier, and quite simply that net zero refers to balancing emissions to your removals. But I think LSEG is quite uniquely positioned, being the center of the global financial markets environment or ecosystem, to where we can act as a facilitator for this, and bringing together investors and issuers, where there's requirements for data and disclosure, so catalyzing consistent, comparable, and reliable global climate change data, but also then growth in the green economy, enabling the growth and development of green industries, and then climate transition across all sectors. So, supporting investment and capital flows to achieve climate transition and resilience. So, yeah, I think that's just a short answer on that point.
Thanks very much, Ian. And I think it's important also to say that, we are, as a business, we're very committed, but also we try to facilitate, obviously, sustainable finance on the market. And LSE was also the first exchange to launch a dedicated green bond segment back in 2015. And we've launched in 2019 a sustainable bond market following extensive market consultation. The sustainable bond market, SBM, is actually aligned with global principles such as ICMA, and we've seen a lot of issuances using that segment. We have now over 60 billion worth of capital raised on this segment, which is almost 300 issuers, and names includes the likes of Burberry, International Finance Corporation, NatWest Group, Barclays, to only name a few. And as Jean-Marc has mentioned earlier, our sustainable bond market includes separate segments for green, social, and sustainability bonds, but it also includes an issuer level segment for sustainability linked bond, which obviously the proceeds are used for corporate general purposes linked to sustainability KPIs. A good example of that is, as we mentioned earlier, is Tesco, which recently issued its first sustainability-linked bond listing on the London Stock Exchange. The bonds the size was 750 million euros, and the coupon was essentially tied to the company's sustainability performance related to gas emission reduction by 2050. So, Jean-Marc, going back to you, then, when, from your experience working with corporate treasurers, when the board decides, for example, that they want to issue green bond or sustainable instrument, what are the corporate steps, what are the practical steps that a corporate treasurer has to take in order to be able to issue an instrument? And how do they know which type of instrument, sustainable instrument to issue?
Yeah, thanks. So issuers need to have two documents in place ahead of issuing green bonds: the green bond framework, And that's really a key document. It's about the company's sustainable strategy, and there should be a lot of focus on that. And that's where you'll get grilled. That's what investors will look at. That's what the press will look at. And that's your, strategy. So it's at the heart of the company. And the other thing is the external review of this framework. So that's a second party opinion. The green bond framework is expected to align to the ICMA green or social bond principles. They have just been renewed, and increasingly issuers are also aligning their framework to EU taxonomy. Obviously, we'll see the UK taxonomy coming up. So that's classification. The taxonomy defines very clear thresholds to define an activity that is either green or sustainable. So as we know, the investors in the EU will be expected to provide a lot of data, their alignments for their portfolio to this upcoming or this EU taxonomy activity that is coming on the 1st of January 2022. So it's very soon. So they will be increasingly expecting issuers to provide transparency in their framework and certainly annual green bond reporting on the alignment of their bonds use of proceeds to this EU taxonomy. So the framework will give the guidance to how the company will select the projects. That's a classic, one of the 4 pillars of the green bond principles, and then inform and report on the execution. So again, from a strategic point of view, the structure must be credible, able to challenge, able to withstand challenge and scrutiny. I can't insist enough. ESG is becoming an important part of the credit story. Whether you do a green bond or not, on the roadshow, you'll be scrutinized. You get a lot of questions. The investors ask ESG questions 100% of the time. So in your framework, you need to think about what will work for the whole company in terms of the use of proceeds, the ESG targets, the KPIs, what is compatible with the existing overarching ESG strategy and targets, what is aligned. If KPI targets already exist at certain maturities, it can be very challenging for a corporate to create new intermediate targets for just the bond market purpose. Like the path to a final KPI targets is not always linear, right? So in terms of bond market, your question, Aude, there are clearly 2 routes: the classic use of proceeds, and more recent, the SLBs, the sustainability-linked bonds, which I think is super useful for some of the issuers to really be able to do a green bond, but not sort of straitjacket themselves with the use of proceeds frameworks. So we've seen the surge in the issuance of SLB from various corporates. You mentioned Tesco, but we've seen others. There is no restriction on the use of proceeds. It's for GCP, general corporate purpose, right? So the issuer instead commit to a company-wide sustainability KPI and set ambitious target. And again, this has to be ambitious. It's ambitious to yourself, what you've done so far, ambitious to your peers. And again, that we very, very scrutinized. I think, Barney, you mentioned greenwashing. That would be really a key element for the investors to look at. If the issuer does not achieve this target, there will be a financial penalty. Largely, it's a coupon step up, but we've seen innovation. Recently, the Australian corporate Borley, the KPI trigger was linked to an above par redemption price, rather than the usual 25 basis points coupon step. So you can adapt to your own circumstances. So I really think SLBs have opened up the ESG bond market to issuers that will not have sufficient green capex to issue a use of proceeds green bond, but they do have credible and ambitious sustainability targets in place with a clear sustainable strategy. So again, strategy, strategy, and strategy. That's what matters.
Thank you, Jean-Marc. I think that's very clear. So continuing on the topic of capital raising and bond issuance, we're seeing how technology and innovation and automation is increasingly important to help corporate treasurers manage their responsibilities efficiently. And we've seen that there are currently some innovations in capital markets, in particular with automation of workflows, designed to really simplify and facilitate the capital raising process for corporate treasurers, but also for the syndicate of banks. So Ian, starting with you, firstly, congratulations on the $7 billion bond issued earlier in the year by the London Stock Exchange Group, which the proceeds have been used to actually refinance the acquisition of Refinitiv, now a full house. This transaction obviously was a milestone because it marks the largest multi-currency issuance by European corporates year to date. So, congratulations. Can you tell us a little bit about these complex transactions and how was your journey in preparing and executing the transactions as a corporate treasurer?
Yeah, thank you, Ord. Yes, the end of it was just a very successful transaction. We're very appreciative of the support we received through that entire process. At the end of the day, we issued $4.5 billion US, 1.5 billion euros, and 500 million sterling, and that was across 3 currencies where we built a really good US dollar credit curve, and we issued tenors between 3 and 20 years with coupons ranging between 0 and 3%. So we're very, very pleased with the outcome. I think reflecting on the process, I'd say no bond issuance is not complex. But I think our process was pretty complex in that we had to. We were dealing with between 15 and 20 banks, having just used bank facilities to fund the initial Refinitiv group acquisition. And then it was also being our largest size. I think it's just that the size creates more complexity and scrutiny. And then the fact that it was multi-currency, it was our first foray into the US dollar markets, which then also had certain idiosyncrasies and particular factors that we had to make sure we were cognizant of and worked around. And I think in terms of a journey for us, it was definitely a journey, albeit I would say a short one. We had to work to really short timescales, and I think because of that, project management is extremely important. The challenge was putting the right resources in the right place, given the short timescales. We've just issued an equity prospectus, gone through this acquisition, and released our annual results, and we're working on the disposal of the Borsa Italiana group at the same time. So that was for that, the project management was key. The sizing was important. We weren't so accustomed to that size, but getting the sizing right was important. We didn't want to have to come back to the markets too soon, but then also we wouldn't want to take too much on either. I think because a key factor for ourselves is showing a strong deleveraging profile, but then we also had to balance the refinancing risk across over time for bond maturities. And I think our group is particularly strong on relationships. I would say we think our relationship with our banks are very important for us as a group. We're both clients and vendors, so we try to make sure we manage those relationships very closely. And so for us, that the selection process was very important, which banks to work with in each market and who we thought could support the best in each instance. And also the fact just simply that we're a new group. We were still meeting new people and trying to see how learn how to get what information where, and who was best placed to give us what we needed to get the bond issuance in time. And simple things, US GAAP versus IFRS information, and auditors, audit comfort certificates, and credit rating agencies, dealing with them, making sure the assessments were in place in time. I think also then issuing bonds in lockdown conditions, and that was new for us. We in a way that made the process simple. It took it a little bit out of our hands, especially on the roadshow side of things. We had to, like most people now with the COVID environment, we had to definitely make more use of technology and consider that more than we perhaps would have done naturally. And also then balancing the risk management side of things. Completely new group, we had to make sure we had sufficient contingencies and buffers in place in terms of, size, approaching markets, managing also then the flexibility around timing. We had to work to some tight timescales. Then also, the interest rate risk management, that was also quite a challenging piece. And coming back to the technology side of things, I think we did have to think and challenge ourselves to see where we could use technology more efficiently.
Exactly, and I think worth also adding that it was you had to set up a program as well as part of the insurance, because it was part of a GM program as a way to enable further issuances going forward. So quite a milestone and complex transaction, Ian, and I think very innovative, because one of the sort of the key highlights of the transaction, it was really executed using Flow, which is an end-to-end platform that aims to automate the origination, negotiation, and execution of DCM transaction. And really, the idea is to make the life of participants a lot easier, the one involved in the transaction, through automation. The transaction also used a digital platform called Spark Live in order to host a virtual roadshow, given the COVID context, and you hosted a roadshow with over 200 investors from across the world. So really take focus DCM transaction. So from your perspective, again, as an issuer, how did the technology platforms such as Flow and Spark Live really made your life easier in the capital raising process, both as a acting participants in the transaction, but also to help you manage all your other funds, funding responsibilities that you had to carry on while executing the transaction?
Yeah, so that's a good question. I think we were dealing with, to my earlier points, we were dealing with so many competing deadlines, tight project management, and I think a system like Flow, what it did for us. Obviously, we took it was a good opportunity for us to test use our own technology, showcase it, get it more known in the market and with certain banks and lawyers. But I think the benefit of it we saw was, and like putting a system in place around anything, I think what it did was it kind of forced us to think a little bit more systematically, and some of the things that some people would maybe leave to the end or only really think of towards the end, it kind of got us to and helped us to kind of preload or front run it, and think through small things around term sheets or anything where there's final bond issuance processes. So I think it was really good at putting a systematic approach around that. And I mean while it benefited us, I think it would help regular issuers even more. I think where they have more standardized processes on issuances, it would very much support that process. And then on the Spark Live side of things, I mean, I think it was a good system to use. I think all our meetings were being online. We felt extremely comfortable using that system, and our investors were very comfortable with it. And also, I mean, I kind of forgot it was there. Actually, I think is what you want. I was able to think a little bit more on my feet. We had some quite interactive investor calls and presentations, and we were just able to then engage very directly with them and help them to efficiently ask questions of us, and they could review all the packs ahead of time and then come back to us and easily ask those questions, and we could answer them straight away. So I think it was also on the back end side of things, it also gave our banks a little bit more some data and analytics to assess which investors had looked at what, and what were how much kind of demand we could expect in which market and which currency. So I think it definitely helped us on both the Flow and the Spark Live system.
Thank you. And I think it's fair to say that, technology really is there to sort of, help you save a lot of time so that you can actually dedicate some of your time to other responsibilities. I think that's really the benefits of Flow, the fact that, you can generate term sheets and final terms directly onto the platform and not having to redraft everything manually was a key benefit for you. And obviously Spark Live, like you said, it was a debut bond in a way, with the debut roadshow.
Yes.
So trying to have that real experience as a physical roadshow was really, important for you. So I'm glad it worked out well. Jean-Marc, HSBC was obviously a joint lead manager and book runner on these transactions. Congratulations for the successful execution. I know that you personally have been in the capital market industry for many years, and obviously you've been leading the execution of many bond transactions. So really this one was a shift in a way from a traditional sort of more manual execution to a more digital execution. So, what was your experience as a banker using those platforms, and where do you see the benefits of technology from an execution standpoint, both from a banker's perspective, but also, speaking on behalf of your client, corporate treasurers?
No, thank you, and congratulations to Ian. We didn't do anything. the team did everything. Look, it was progress in front of our own eyes. Right? It was really fantastic to use Flow for the first time. Tech, I don't think it's about reinventing the wheel, right? But things work. It's not about chasing a world of, fully digitally native securities like, blockchain or stuff, right? But it's really working together faster to really improve the current issuance process, right? And the platform Flow, delivers that, right? It's workflow, it's standards, it's collaboration. And above all, I think it's about creating a golden source, structured data that can be shared among every transaction party in an STP manner, right? Straight-through processing manner, to eliminate op risk, operational risk, improve end-to-end issuance, shorten settlement times, and overall allow for better data analytics, which I think that's where we all want to go. So I think if you go through kind of item by item, the transaction party collaboration was really new, right? To see online what was going on with the documentation, the term sheet and everything. Clear benefit for the treasury team, right? Less emails. I think it's a huge benefit. Live status updates. We could see where the docs was live all the time. So that's better for communication, the approval process, and certainly for audit benefits. Yeah. So all in all, lower costs, I think, lower structural costs, transaction costs, everything is faster, less time for everyone, and certainly to create interoperability. I think that's super important in this market. That's critical to value chain. It's, I think, positioning the issuers and the participants to achieve really added value. And again, reduce transaction time, we'll come back to that, and settlement times. And it's all about, funding costs, you get the money faster. It's about the risk out there. We all remember, and you pointed to my gray hair, but we remember where we had to do trades over 2 days, right? So you book bill one day, you reconcile the book at the end of the day, and you price the next day because we could not do that pre-ebooks. And now that's the next phase. Flow is really paving the way for the next phase where the pre-trade is faster and the post-trade is also faster. So, I think we also want to discuss the data capabilities that will give us. The golden source data creation will allow us to really have unique data for us to really leverage efficiencies, leverage the reporting capabilities, reduction in data breaks. We are still rekeying a lot of things, but will really accelerate execution and then allow for integrated downstream data analytics. So you'll have analytics live during the course of the transaction. And again, operational risk for the treasury team, for the investors, and for the book runners. You reduce, data breaks, you reduce inefficient manual process, that will provide benefits across the whole value chain. So for us, for example, as an IPA on the LSEG transaction, to receive in a structured manner, that trade was a first step to improve the overall issuance process and data sharing. So that's super important to continue to build a platform and have more people on it. I think for the client journey, again, for the treasury team, you mentioned, Ian, the fact that you did not travel for the roadshow, it's all virtual. But again, we spend a lot of time as a treasury team running around on the day across, or even up to the day on the documentation side, on the settlement side. So that with Flow will be faster, less time consuming for the treasury team. Reducing time to market will mean less market risk, right? Overall, faster, more efficient, and more accurate. So we really want to see more issuers leveraging digital issuance platform like Flow for their trades, so that we can collectively, again, it's investors, issuers, it's the banks, we want to continue to reduce op risk, right? Leverage digital efficiencies and ensure a smoother and more resilient market going forward.
Absolutely. And I think it's also worth mentioning the engagement with the law firms as well as part of this ecosystem that we're building with Flow, because obviously they're a key partners when it comes to drafting the documentations. But no, I think that
the prime benefit. Yeah, that's true.
Yeah, exactly.
I should absolutely mention. Thank you.
Yeah.
So just actually, there's relevant questions that can just come through. But when it comes to digital platforms, so someone has asked, and I think it's very relevant, is now that we're going back to normality, fingers crossed, do you think roadshows will be mostly virtual from now on? Jean-Marc, Ian, I don't know if you have any comments on this.
Well, it's interesting, right? Because we had telephonics before going to the lockdown. So we already had the experience of virtual roadshows where you could actually be super efficient over the course of 2 days to see, 100 or 200 investors. So that's, I think, we stick, and it's probably good to have the video as well as the telephone, right? So investors will benefit as well. Everybody's gaining time. So I think that will continue. That said, to actually meet for the first time, to deepen your relationships in terms of investor relations makes sense. So I would really think we will bifurcate. It will be one, probably non-deal roadshows will be a bit more into the physical format, where you have more time, you go deeper into the credit story, into the story of the corporate. And then when you're on a deal, maybe you don't have the time to take 3-4 days to run around, and it's more efficient to update the story, update the credit story, tell investors about the details of the transaction. That you can be done in a virtual format, either just telephonics or actually video on things like Spark Live.
Thank you. And just to wrap up, Barney, going back to you. So we were talking about ESG earlier in the panel. So when it comes to innovation and technology, where do you see that they can actually help corporates with their ESG reporting responsibilities? Barney, I think you're on mute.
Yeah.
Good. Yeah.
So when it comes to digital and innovation, I think one of the main challenges is to digitalize the data collection space. I mean, most of the data that are related to ESG and sustainability are found in CSR reports that are heavily textual documents, for good reasons or not. And that actually makes data collection quite difficult, and although supported by AI, it's also quite manual. You have to scroll through in detail, and you have to read through, etc., etc. So the challenge that it also provides is that with the CSR deregulation, pre-calculations show that it's going to be around 50,000 companies in Europe that are going to be affected and will have to report. So there is going to be a huge supply coming to the market, which will have to be handled on the data onboarding side. And the European Union appreciates that, and there is a sort of European single access point that is going into that direction, which is a digital platform for all sorts of data, including ESG. And it also, for that notion, what we also have created at Refinitiv London Stock Exchange Group is to provide a digital toolkit for our corporate clients who are not in the coverage just now, but have reported and would want to be onboarded into the financial markets attention, prime, and get a rating, and then they can use that kind of digital platform to basically self-contribute their data. So the collection and verification just simplifies to a verification process, and time to market and coverage increase is going to be faster and quicker.
Thank you very much. Well, I would have loved to carry on this conversation with you all, but we're running out of time. So Ian, Jean-Marc, and Barney, thank you very much for your participation today. I think that was very insightful, and we'll give plenty of ideas to our corporate treasurers community. So thank you very much, and looking forward to continuing working with you all.
Thank you.
You too. Thank you all.
Thank you.
Goodbye.
Bye.